Hi, I'm Danny LeBeau, and welcome back to the Fourth Revolution, where I discuss stocks for your portfolio of the future. Today, I'm going to be talking about one of the most hated and loved stocks in the U.S. markets, Tesla. As you guys probably know, this company has seen prolific returns over the last couple of months, actually having tripled its stock price since June, and has become the most valuable automaker in the U.S. So what is the reasoning behind this? And the biggest reason behind this is because 2019 is the first year that Tesla, a company known to overpromise, underdeliver, finally hits its targets. The firm was able to deliver 367,000 cars, and this was way beyond analyst expectations. Elon usually's overzealous targets aren't taken seriously. He said in the beginning of 2019 he was going to deliver 350 to 400,000 cars. No one took him seriously, and look at him now. Over 350,000, and that's over 50% higher than the deliveries in 2018. So another target they hit was the Shanghai factory, and this factory is huge for the company. They were able to make this in record time, and we're producing 1,000 cars a week by the end of 2019, which is another thing that was beyond analyst expectations, another promise that Elon finally kept. Shanghai gives the company direct access to the largest EV market on the planet. They hope to source 100% of their production from China by the end of this year, which will give the company lower costs for their production and will give them also good repertoire with the local government. So, this ostensible electronic car king has announced it's building another gigafactory outside of Berlin, and it's expecting to manufacture cars there by the end of next summer. And this is just another component to this electric car manufacturer's empire to take over the automotive world. And I think it's close to getting to that mark. But the question is it worth $100 billion? And a lot of bears would say no. The company hasn't turned the annual profit, as a debt-to-capital ratio of 66%. And that's a little bit concerning looking at the balance sheet. But, you know, this company is expected to turn a strong profit this year and an even stronger one in 2021. The company has $5 billion of cash on its balance sheet, and it has a lot more room to run. Its investments right now are just beginning to pay dividends. Its Shanghai investment, like I said, is going to be huge once things are fully ramped up and they're up to 3,000 a week production cars. And I think that's going to be a lot of demand in China once these cars are fully sourced there. So the question is this rally going to continue? And as you can see here, like, a lot of this is short squeezes. It's been a pretty much straight up shot since the beginning of Q4, and I think a pullback is inevitable here. It's just a question of how much and when. Earnings are coming out in next week, January 29th, on Wednesday, and this could be a catalyst one way or the other for this stock. This company is known to move big on earnings. They've had an average price action of 9% over the last eight reports, with 4 being up and 4 being down. So it's kind of a coin flip what's going to happen there. But during earnings calls and during the earnings report, look for more news coming out of the Shanghai factory and expected production for this year, as well as continued guidance for their Model 3, which is becoming their biggest product. So I think there is more room for this stock to move. Some analysts are expecting this stock to run up to $6,000, which would be an unbelievable return from where it's at today. But we still have a lot more runway to go, and a lot more risk still on the table. So look for more news coming out of this company, and thank you for watching the Fourth Revolution, and I look forward to speaking to you guys next time.